that the Narasimham Committee I is the committee that modernized Indian banking, and that too in one of the toughest time in India's economic history. So what was happening in 1991 when this committee was formed? Let us understand that. So there was certain unbelievable things which you cannot think of which was happening in 1991. As far as the banks are concerned, they were keeping aside almost 53.5% of their money. Yes, that means what? That means if the bank had 100 rupees of deposits with them, they were keeping 53.5 rupees aside and utilizing only 46.5 rupees to make profits, to give out as loans and to make profit out of that. Now imagine a situation wherein you start a business and it is told to you that keep more than half of your money aside and then work. Imagine how difficult it would be for you to work in such a situation and make sure that the system functions and profits are made. So this was the situation wherein the Narasimham Committee was formed in order to review the banking system and modernize the banking system and come up, most importantly, with reforms in the banking system. Right. Now, what was the situation in the economy? So this was the situation of the banks. But what about the situation of our Indian economy? So as far as economy is concerned, we were dealing with something known as the BOP crisis. BOP is the balance of payment crisis. So our exports to other countries were way less than our imports from other countries. Now, when you give exports, when you do exports, you earn foreign exchange. When you import, you have to pay in foreign exchange. Since our exports were less than imports, we were dealing with a big economic crisis of the balance of payment, wherein we did not have the money to give for the imports. In fact, we reached a point wherein only about 2 weeks worth of import worth of money was, or foreign exchange was remaining with us. So this was the issue. Another thing with respect to the bank, we have already seen how the banks were constrained and their money was set aside, as a result of which we needed an overhaul. Now at that time, our Prime Minister was P.V. Narasimha Rao, and we had a finance minister, a stalwart of a finance minister, that is Dr. Manmohan Singh. Now under this particular government and under the aegis or the ambit of finance ministry, the Narasimham Committee I was formed. Why we name it one? Because another will be formed in 1998. So this was the Narasimham Committee I, which was formed at this particular juncture. So we will see what it did, how it did, what recommendations did it give, and what did the government do about it, what was the criticism, and what has been the impact. Was it successful or a failure, and do we see its implementations even now in the present economy? This and much more is what we will see. Before we move ahead, an important notification about the new batches that are starting at Legacy IAS Academy. Now over here, you will have a batch size of only 40 aspirants. That's the maximum batch size that we have. Not just that, in addition to it, there are a lot of advantages that an aspirant at Legacy will get. Right, some of them are listed here. For example, comprehensive coverage of syllabus, maximum 40 students of batch size, I've already told you, one-on-one mentorship and doubt solving, plus regular interaction with the educators, with the faculties, is a game changer. We of course provide daily mains answer writing as well as test series for both prelims and mains, as a result of which it becomes a one-stop solution for you. Not just that, the current affairs, as far as current affairs are concerned, we have a 360-degree approach wherein the entire week's current affairs is covered through live classes. Now the batches are starting from 3rd of August is the latest, the newest batch that will start. For regular batch, that is from Monday to Friday. Other batches are also there in September and November. If you're targeting 27, this is the batch to enroll for. For weekend batch, it is specifically designed for working professional and students that still go to colleges. So for them, it will be on Saturdays and Sundays, and the batch starts on 8th of August. This is the best batch to start if you are aspiring for 27. Apart from that, there are batches in October and December as well. So this is what the foundation courses are. Plus, if you are, of course, having optionals, any one of these four, that is psychology, PSIR, anthropology, and sociology. Now, these are the four most popular, four most easy, you can say. Of course, nothing is easy, but with concise syllabus and a lot of overlap with GS papers, the best of the best optionals. All four of them are also offered at Legacy IAS Academy. So if you will be attempting for 27 or for 28, you can enroll for this course as well, which starts on 17th of August. Now, if you want to enroll in any of the course as mentioned, you can simply download the app and enroll, or simply call on this number given on your screen. All right, now let's continue with our committee. So first things first, let us look at the constitution of the committee, right? So in UPSC, they are asking us which committee, who constitute, and what it did. So this bare minimum we have to see. Plus, of course, we will go into the details so as to address any kind of question in prelims as well as in mains. So this committee was constituted by the government of India, right? It was constituted in 1991, and Mr. M. Narasimham was the chairperson of this committee, and this person had been a former governor of the RBI. What was the official name of the committee? Very important. Instead of Narasimham Committee, they may give you this name. Official name was Committee on the Financial System, right? And it was constituted by the government under, as I mentioned previously, Ministry of Finance. Now, what was the context? The balance of payment crisis was the context over there. So now let us see what recommendations did this committee give. So first things first, the recommendation that they gave was phasing out directed credit programs. Phasing out directed credit programs means when the RBI directs as to in which sector you have to give how much credit, that needs to be phased out. It should not be directed. There should be more autonomy, right? Next is creation of Asset Reconstruction Fund Tribunal. Asset Reconstruction Fund Tribunal. Now, presently we have Asset Reconstruction Company. So at that time, they wanted to create Asset Reconstruction Fund Tribunal. So the Asset Reconstruction Company sees its initiation from this committee only. What is this Asset Reconstruction Fund Tribunal? When the banks have bad loans. What are bad loans? The NPAs, non-performing assets. So there needs to be an entity which will buy these NPAs and try to extract as much as possible the residual money from it in order to clean the balance sheet of the banks. So for that, it recommended the creation of Asset Reconstruction Fund Tribunal. That is really good. Next is the removal of dual control. So the bank should be only regulated by RBI. There should not be any other control by the government, for example, when RBI is already regulating it. So this is going to give them more autonomy over here. So autonomy, which is what was provided. If you move ahead, it also talked about reduction in the statutory requirement. What are the statutory requirements? These are also known as the reserve ratios. So it said that please lower the CRR and lower the SLR. So what is CRR? CRR is cash reserve ratio, right? It is the minimum amount of money that the scheduled commercial banks are required to keep with the RBI in the form of cash. In addition to this, it also mentioned about lowering the SLR. So what is this SLR? It is the minimum amount of money that the scheduled commercial banks are required to keep with themselves in the form of either, so SLR will be in the form of either cash, gold, or approved securities or any combination of three they can keep with them. Remember, in the beginning we saw 53.5% of money is kept aside. It constituted majorly of these things only. So the Narasimham Committee said lower this so that the bank has more money to give out as loans. Then market determined interest rate. It said that the interest rate should be market determined. Now you can clearly see that this committee is given recommendations which are on the liberal side, right? You can clearly see that. So that's why we say that this committee led to the modernization, because following the rules, regulations and the things which are followed by the rest of the world, which are followed by the Western countries, which are the practices in other parts of the world, we are also trying to do that over here. Next, it mentioned about greater autonomy for the banks. Control should be less, autonomy should be more, so that they can function in a more efficient manner. And reorganization of the banking sector. It also mentioned about reorganization of the banking sector. Now, in this, a very important objective, or let's say the objective recommendation was this. When we discussed about phasing out of directed credit programs, in this it had recommended that the priority sector lending, which was at that time 40%, should be reduced to only 10%. Now, what is this priority sector lending? Priority sectors are those sectors which are unbanked or underbanked, wherein funds are not generally given by the banks in the sectors because of the fear of the funds not coming back. These sectors include agriculture, MSMEs, socio-economically weaker sections of the society, so on and so forth. Housing is also a PSL, priority sector, for priority sector lending. So the Narasimham Committee said that you should lower the PSL requirement from 40% of adjusted net bank credit to only 10% of adjusted net bank credit. Why? So that the banks can also profit, function efficiently, which is the need of the hour. All right, so these were the recommendations of Narasimham Committee. Now let us understand what has been the criticism of this committee. Now, aspirants, by looking at the recommendation, you should be able to identify the criticisms on your own. But first, it's better to understand them. So first things first, as I mentioned, that the Narasimham Committee said that the priority sector lending to be reduced from 40% to 10%. Now, this is one of the criticism. It is said that Narasimham Committee gave anti-priority sector lending recommendation. It was anti-priority sector committee, a committee which is against the priority sector. Not just that, it also offered excessive financial liberalism, is what was argued, that too much of deregulation of interest rate, the entire interest rate should be dependent on the market price. So what will happen? The socio-economically backward, the last person standing in the queue might be left out. So the opponents of this committee recommendation feared that profit motive will dominate the banking. So social banking would also be dominated by profit motive. Rural branches would not be viable. The banks would not be willing to open in rural areas, so it will remain undeveloped, underdeveloped, and majority of the population was still now also resides in rural area, at that time also was residing in the rural area. Then though it was even a higher percentage of population residing in the rural area. So that was the criticism of this committee. In addition to it, market oriented, rather welfare oriented nature of the recommendation also were criticized, right? So let us see what the government's response was. Now the government accepted almost all the recommendations of the Narasimham Committee except for two recommendations, and that was a really good thing, in the sense that the thing that we criticized, right, they did not accept that, they rejected that. For example, committee mentioned to reduce the priority sector lending to 10%. The government said nothing doing. I am going to reject that recommendation. So this priority sector lending requirement reduction was rejected by the government of India. Next, it also mentioned that the public sector banks that are there. What are public sector banks? The banks in which the government is holding the majority stock, right? The committee said that lower the stock of the government in the public sector banks to 33%. So wherever it is higher than 51, lower it to 33%. The government rejected that as well. The government said, no, nothing doing. I'm not going to lower it. You want new private sector banks to come? It can come, but I am not going to lower my stake in the public sector banks. So it did not lower that. Right. So the main thing of criticism with respect to public sector priority sector lending was not accepted, and the government was also not willing to lower its stake in the public sector banks. Now, what has been the impact of the Narasimham Committee I's recommendation? Let us see that. First things first, it led to the modernizing of Indian banks. As we have seen, we are following now the practices from around the world. Next, healthier and transparent bank. Healthier because now too much of money is not stuck. They can utilize it, so they will be healthier, they can use it better. So healthier as well as transparency will also be there. Then stronger banks comes with more money at their disposal, makes them stronger, and increased competition because the private sector banks are also now coming in more and more, so it will lead to increase in the competition. Now when the competition will actually increase, so then what will happen with the increase in competition? The idea is that efficiency also comes in. Let us understand this how. See, we had the public sector banks. So we had the public sector banks wherein the government is involved. Now, these public sector banks which are there, it was not the case since the beginning. So in the beginning, the situation was that we had private sector banks and public sector banks, but in 1969, the government of India had nationalized 14 banks. Now, subsequently, in 1980, the government of India further nationalized 6 more banks. Right, so nationalization was on the rise. Right. However, in 1991, we started allowing the private sector banks. Any idea why did we do that? Can you mention in the comments as to why did we allow private sector bank? Because we went for LPG reforms, that is liberalization, privatization and globalization reform. Liberalization means making the rules and regulation liberal, ease of doing business will be increased. Privatization means allowing the private sector in the field wherein they were not allowed previously, and if they were previously also allowed, further facilitate their inclusion in that particular sector. Right, so that is privatization. And then globalization, not directly related to banks, but fair enough, globalization was about lowering the tariffs so that more integration among the different countries of the world can take place, India and the rest of the world. But our focus was over here. So liberalization, rules and regulations becoming easy, and privatization, private sector also being allowed. As a result of which, the private sector banks started entering the Indian economy more and more. That is why in India, if you talk about domestic private sector banks, there are 2 types of domestic private sector banks. One are known as old domestic private sector banks. These are those banks which were private banks even before 1991, and they were not nationalized in 1969 and 1980. Whereas the other type is the new private sector bank. These are those banks that were established after 1991, after the economic reform. So 2 types of domestic private sector bank, one is old, one is new, and there is another type of private sector bank that will be your foreign private sector bank. Right. In addition to this, you have the nationalized banks or the public sector banks as well. Now, interestingly, all these bank types that I have told you, all of them are actually the scheduled commercial banks. Now, if you look at the scheduled commercial banks, what are they? They are those banks that are mentioned in the 2nd schedule of the RBI Act. These are those banks that are mentioned in the 2nd schedule of the RBI Act of 1934. Now, they are mentioned and others are not. Why is that the case? That is because these are bigger in size, they have higher market capitalization, they are more important for the economy. That is why they are mentioned in the second schedule of the RBI Act of 1934. That is why they are known as the scheduled commercial banks, that is SCBs. There are non-scheduled commercial banks which will of course not be mentioned over here. Now in addition to that, there will be cooperative banks, there will be development banks, which we have covered in various other videos, so do watch them as well. So this was the entire thing that the Narasimham Committee recommended and we accepted, and you can see its impact even now when you realize that the Indian banking sector is now more modernized, it's healthier, it's stronger, increased competition by the involvement of more banks. Not just that, it is more liberalized also, because remember when we started with that saying that 53.5% of the deposits are stuck. Now this percent has drastically gone down, giving banks more money, hence more power to conduct their business, to carry on with their business and try to make profits as well, and also serve the priority sector, because we did not change the priority sector lending percentage. Now later on in 2015, 14, 15, we did see an increase in NPA, but now they are also under control, and our banking system, however, it is overburdened, but still is functioning smoothly. Thank you.